Hey, what's going on? What's going on? How's everybody doing? Happy Hump Day. Happy Wednesday. Cheers. Got the iced coffee rolling. Second cup for the day. Everyone said, oh, the market's red. We're going to zero, this or that. And it's like, man, you guys be reading into the articles and FOMOing too much, But that's also a part of some people and why they struggle. When you come in and you trade with a plan and you stay consistent and you repeat it, you can then scale it over time, and that's how you make more money over time, right? A lot of people come in, not with us, but I'm saying in general, people come into the market saying, "Well, I'm going to make $1,000 a day," and it's like you're not going to make it that. You can make $1,000 a day, but you're not going to make $1,000 a day if you can't consistently make $10 and $20 a day, then $50 to $100 a day. So there is levels to it, and the reason I say that is because the $1,000 a day mark is good, right? But there's also drawdowns to that and losers, and some people allow the psychological aspect impact them so that they can't take that drawdown and trade their plan effectively, and that's exactly what I mean by that, right? So I day trade, I swing trade, and I invest, right? I believe in three different trading avenues. Staying diverse with everything that you do helps out over time, and that's why we're very good at what we do. So today, before we get started, just throw in the comments where you're watching this from. I want to see how far across the world we make it. And with that said, I trade stock options, futures, and I buy shares and crypto coins. So I'm going to show you a simple, repeatable process and pattern on why I called out certain things that I did today. And you can see how this repeats over and over and over again. So let's get ready to rock and roll and dive right in. So the first trade, right? The candles are red. We hit this pivot and we took a breakdown here, right? Unfortunately for this trade, this ended up only going about 2.5, just shy of 3 ES points. With the volatility, we told people you can skip this trade because your stop loss has to be way up here, right? So there's a lot of people that didn't take this trade. Me personally, I got stopped out at a break even, but it's all good. So then price came back up, and then price came back down again. Here's another breakdown off our pivot. Once again, your stop out is fairly large. So some people skipped that one as well. This next bar gave us a prime opportunity. Here'd be your stop loss. And a lot of people took this first trade right here for 59 all the way down here to 52. That's 7 ES points in your favor, right? There's a potential to get about $350. Could you have gotten $100 or $200 on that trade? Yup. There's your first trade. Then we reset. A lot of people took this pivot break to the downside right here, and they made money. Then the next time we got another opportunity was right here, and boom, right? In a market that is really volatile like this, sometimes it's best to skip those trades. We talk about that openly and wait for a better setup as far as proper risk management. So in the volatile market, you got your two nice winning trades right here. If you trade everything and or have a larger account, you could have taken this trade for a break even. You could have taken that second trade for a winner, third trade for a winner, fourth trade for a winner. You got another grand slammer over here, fifth trade for a winner, all in the first 30 to 45 minutes of the market. So ES was another great day in the markets, but you got to stay consistent. You got to stay disciplined. You got to sit back like this and wait for the trade to come to you, right? We just don't chase stuff, So that's how we trade ES safely. You would have gotten, like I said, once again, this trade right there and that trade right there. You would have got 2-0 for something that is moderately safe in a volatile market. The VIX is up almost $2 on the share side today. Then we come over to this chart right here, which is NQ. We trade NQ as well. This right here is a great pivot break. However, my stop out, 100 points for a stop out, I didn't take that one. I told everybody I'm not taking this one. It technically is a trade, but it's too big. Then price came back up. Here is the grand slammer. There's your stop out. Guess what? Boom. There's one winning trade. Then we got the breakdown on this candle right there. There's two winning trades. Bam. Then price comes back down over here. You would have taken a trade right there. You would have got stopped out, and then you would have taken this trade right there. Bam, there's another winner. Once again, I tell the new folks, get one or two winning trades. At that point, you're 2-0 for the day. You get two winning trades, go walk away from your computer and come back again tomorrow. So we try to get one or two winning trades, especially for newer folks. Then they can go on about their day, go have fun, and do whatever they want to do. And we know we don't have a 100% win rate. That's why we must use proper risk management, right? So the second thing we have, right? The second thing we have is this trade going on right here. You see this third trade where technically it was a loser. Guess what? You go from 2-0 to 2-1. Then people, right? If you're newer, you get upset. You revenge trade. Then you over leverage something on the next trade, and if it goes against you just a little bit, then you panic sell, and that's not a good situation to be in. We want to stay consistent. We want to trade the plan, and we want to use proper risk management. So a lot of folks got that first trade was done. On NQ, some people took the second trade, third, fourth, and fifth trade. As you can see on a strong trending day, if we come over here, we got a lot more opportunities for some of the more experienced folks. Here is another winning trade. 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 1, 2, 3, 4, 5. You had 5 more trades. 6 trades. 6-1. 7-1. Right? 8-1. Right there. So 8-1 if you took every single trade. I'm telling you to stop out at that first winner or second winner, because that is how you grow your account and prevent yourself from over trading. This third chart we have right here is CL, trading the same pattern we have. We have other techniques that got us in. We actually took a breakdown right here. We got notified a red candle, red arrow. It's a different pattern. We're not going to talk about it too much because I'm showing you how we trade this pattern, and we simply, in the first 30 to 45 minutes, we simply don't get a good trade right there. So unfortunately, if you traded CL only today, you didn't get a trade, and that's part of staying disciplined and following your plan. Right now, we come into the new start. The new start. We trade stock options as well. Like I said, I'd say half the team trades options, the other half trades futures, and half of each trade both. Like myself, I consider myself a hybrid because I trade futures and stock options. I love them both, but that's just me. And here we have it, right? Same setup, same pattern. The candles are red. We hit this pivot right here. We took a breakdown right out the gate, and this thing fell from 442 down here to 438. That was a textbook, give me my money type trade. Then obviously, like, you take this trade, we're kind of consolidating here. You had a breakdown right there if you wanted it. You got a nice pullback, and here was another textbook breakdown with your stop loss right there. Boom. A nice loose trail. You would have been able to capture most of that. But if you took that first trade, guess what? You got 1-0 on Tesla. Now, on this other instrument, we have an SPX Lotto that we call out each and every single day. And the power of this is oh, did I pass it already? Yeah. The power of this is, you see our AI Lotto low. We're using this as a strike price because we have it back tested to give us a probability of 75% probability to go 50 to 100% ROI. That means 3 out of 4 trades we expect to go 50 to 100%. As you can see, we took the breakdown right here. Down here, if you're still in it, you're up probably 300%. If you caught all this move, you probably got your 50 to 100% right there. It went against you, coming back down, bang, here you have it. So we're actually on a 19-day win streak yesterday. Technically stopped me out at break even. Didn't quite hit our target, but we were up, and with us being on a huge win streak and some of the news, I recommended and told them ahead of time, I highly recommend going risk-free, but that's just me, you know? So with that being said, that's how we navigated this trade. So that's how we day trade. And if you can't day trade and you swing trade, we're going to pull SPY up. We're going to change this from the 5-minute to the 1-day time frame. And we're going to pull this back right here. And you're going to see something just like this, right? You're going to see something just like this. So I'm going to put the chart in, and you're going to see a green candle, green arrow right here. And we take calls. What's powerful about this is if you buy 4 weeks of expiration time and you get $2 to $3 on the share side, you'll get about 15 to 30% ROI, and that's pretty good. Now, with 4 weeks of time, if it hits our stop out, which would simply be the previous structure low, right, we're typically going to lose about 25 to 30%. So we're basically risking one to make one, and as long as we have a 55% win rate, right, that covers all of our fees and then some. But I mean, I wouldn't trade a 55% win rate, but you could. I'm going to show you the power of this. If you just waited patiently and let the system generate the high probability setups, this is how it could benefit you, right? Green candle, green arrow, winner. Green candle, green arrow, winner. 2-0, 3-0, 4-0. Oh, loser. 4-1, 5-1, 6-1, 7-1, 8-1, 9-1, 10-1, 11-1, 12-1. Oh, loser. 12-2, 13-2, 14-2. Right there, we'll call it a loser. 14-3. It did move $2, but exactly moved $2. So we're just gonna go with a loss. 14-3. Here's one of our arrows. 14-3, 15-3, 16-3, 17-3. This doesn't look like much, but it moved almost $4 right there in a matter of 2 days. So we were 14-3, 15-3, 16-3. We're 17-3. 17 winners and 3 losers. Would you be happy with that? I'm a visual guy, so I like to know the true win rate, the probability. So 17 divided by 20 total trades, that's an 85% win rate, right? We're right in line with our probability of 86%. Now, of those 17 winners, let's just say we only made a measly 25% ROI. That's 425% ROI. On the losers, let's say we lost 30%, right? That's 90. So we're going to minus 90%. Over the course, right? This is 335%. If you risked $100 on every single trade, that $100 is now $435. If you risked $1,000 on every single trade, that $1,000 is now $43.35, right? If you risk $10,000 on every single trade, that $10,000 trade is now $43,350, right? Now take this in consideration. This is only about 5 months, 5.5, we'll just say 6 months of work, 20 trades, right? We're averaging about 3 trades a month, so you don't get trades every single day, but when they happen, they're very powerful, right? They are very, very powerful. So with that being said, you got to start somewhere, and then you slowly go to the next phase, and then you go up to the next phase, and now you're making a substantial income. If you would multiply that by 2, let's just say we made $80,000 a year on something that takes less than 5 minutes a month. Get where I'm going with it? So time is valuable, and you let the software, the AI, our intellectual property, do all the hard work. And that's just one way that we can swing trade. We also sell and take debit spreads as well, but I'm just showing you this one pattern, right? The key is I don't win every single trade. You saw me lose 3 right there, right? But if you follow the plan over time and take a step back, that's what's going to help you generate those consistent gains that you're looking for. Now, everybody knows what Ethereum is. If you look at this from a investing standpoint, and you come down here to the 1 week time frame, and you look at this from a I call this my real estate method, right? We are at right now $27 a share. The most recent high was almost $40 a share. Now, if you have $1,000, right, and you invest, we'll just go over the last 2 years, right, 3 years. When you have a buy, you have another buy, you have another buy. You put your $1,000 in on the first buy, right? And your $10 up here to 20. Is this it right here? 20. Yep. Right here's 20. Right here is 30. And up here is 40, right? So your 1K turns into 2K here. Then it turns into 3K up here. So guess what? Your 1K, once it moves up in your favor, turns to 2K. Sell out. Bring 1K back. Let 1K ride. Then this 1K generates another $1,000 up here, right? And sell out. Bring another 1K back, right? Now we have 2K on the side pot. While we're still in the market, with, right, with $1,000. Now we're going to erase all this just to clean it up. Just to clean it up, our original buy was right here. Now we get another buy right there. Well, if our first buy was here, and we put in another 1,000 from our $2,000 pot. We have 1,000 on the side. Now this position becomes worth 2,000. Our cost average is roughly right here, about 1,750. Once we hit $35, your 2K is worth 4K. Sell out, bring 3K back. Now we got 4K on the pot, and we have $1,000 for free. The market resets, comes back up, we get another buy, put in another $1,000. We now have 2,000 total. Your 4K becomes 3K. And if this is our last average and we buy in again, it comes up here just about $22, give or take. Your 2K almost turns into about over 3K. We're just going to say 3K. Sell out, bring 2K back. We now have 5K on the side while we have $1,000 rocking and rolling. So we just turned $1,000 my way, 1K into 6K, right? And the power is once you get a side pot going, now you can watch multiple investments, houses, real estate houses, like I said, which is investment companies. And when we get a buy, we're going to take that buy, right? So I'm going to erase all this. So $1,000 in the market, we got $5,000 on the side. But if we sold out everything, we have $6,000 right now. That's a 500% return in less than 3 years, right? And real estate investing can be slow. Now, everybody knows, right? Everybody should be hodling, whatever you want to call it. And you invest 1K, right? The reason I don't hodl or hodl is because once you have profits, how does your account grow if you're not taking profits, right? So check it out. Your 1K turns into 2K, turns into 3K, turns into 3,500, drops back down to 2K, up to 3,500, drops back to 2K, up to 3,500, drops back down to 1K, goes back up to 3K, then goes to 4K, and right now it's at 2,700. So your team hodl is 1K to $2,700, which is still great. You're up right now, right? You're up right now about 170%, which is good. But would you rather have 6K or $2,700? And that's the difference of participating actively or more actively in the markets. Now, don't get it twisted. I'm not here sitting at my computer screen every single day. I have the software notify us on our cell phone. If we get a buy, then I'm going to take it. So I'm not watching or micromanaging these positions every single day because we get trades once or twice a year. So I actually watch about 60 or 70 different companies, and there's always, not always, but more frequently, there's always a company that I'm willing to put my money into, and then over time it pushes up, and a lot of other companies pay me a dividend just for holding these companies. So I always want to be invested and involved, but having a plan on day trading, swing trading, and as you see this, investing, that is the true keys, right, to financial freedom and generational wealth over time. So if you like anything that you see, just comment BMT in the comments. I'll send you an invite, and you can kind of see what we do live, and we'll have a conversation. So with that being said, I appreciate you guys. You have a blessed one. Catch me on the next one. For my coffee drinkers, cheers. Hey, beast mode out.